So why am I looking at these company? Because these five stocks offer a great upside with their market value, and also with their product that they're selling. I can tell you that please do your homework before you invest in any stock. Don't take my word for it. But if you think that I've earned your time, please like and subscribe to the channel. So these five stocks with news, not a lot of information from the market coming next week, and also with last week behind us where major corporation didn't come through as we want them to. Let's look at five stocks, or even more than five, that I have my eyes on, and I think they're in their upside. So we all know that Bowen has been getting a lot of rejection, but I think this company is a great company, but unfortunately they have been going through their phase like all company does. Remember when Nvidia was trading at $1 a share, guys? The company was just going through their phase. And now look at the company, the most expensive company in the world, at 3 point something trillion dollars a share market value. So let's get into Bowen. So my RSI told me that, hey, listen, and Bowen is no longer selling off because we have found a support right here at $137, and my RSI confirmed it right here. As you can see, we have three times, one, two, three. So what happened in these three stages? Once we have hit a new low, what we did, we pushed up, we got rejected, confirmed a new low with my MACD, pushed up, got rejected. And right here again, as you can see, we have found the bottom. So the bottom comes in, and what we did, once we cross on the MACD, guys, we can know that we're going upward. So where this upward stop, nobody can tell. With good news of the company, with better report, it can continues to rally, to rally, to rally. But one thing we know for a fact, that for the last couple months from August, Boeing has been trading below our 200-day EMA right here. So if it's trading below our simple moving average, guys, that's one key information we know. So if we're going short on the company, if we had bought at 37, we would stay in the company and stay until if we test $163, then we will know that, hey, once we're here, if we cannot pass $163, staying for 5 consecutive days, we know what's going to happen. We're going to pull on back down. So we'd of course would have take profit here. But again, if you want to stay long in the company for years, for the next 5, 6, 10 years, then I'll advise you to do so. That's on your own risk. But for me, I have some shares in Boeing, and I'm going to watch Boeing to see if we pass $163, which is previous resistance at our simple moving average, which is my 200-day moving average. And then I would make my decision from there. But I can tell you that this stock is in the upside movement. As you can see, we consolidated, pushed up, got a little rejected, pulled back down, consolidated, pushed up again, got rejected from a higher low. And what we did, we pushed up because some news came out Friday, and pushed up again. So for this week, I will be watching Boeing to see if we can pass $157 a share. And from there, I will assess the stock. But let's go over to better stock that I've been watching. Also, Qualcomm has hit the radar, where Qualcomm is trading, is in consolidation phase, and I think we're looking for an upside. But I will do a lot of homework on this company before I decide to do any investment, because as you can see from the lows of $151, this was in this was in April, May, this was in August. The stock hit lows and consolidated. Earnings came out, beat earnings, pushed up, got rejected because the company is saying that they're buying back some shares, and now consolidation phase, and it seems like they're in their upside. But again, my MACD did not confirm that. So I'm still in the waiting process to see what happened to Qualcomm. Other than that, AMD is on the list as well. AMD is in the phase. My MACD tell me that we pass. AMD is out of the consolidation phase, and it's on the upside. But I will still, again, do my due diligence before I get into any one of these stocks. But one stock that I know has been trending, and this stock does not stop running, I have shares when they reported previous earnings was at what, $10? $10. I have like 3,000 shares at $10.92. So I got in here, reported earnings, pulled back, and look at this rally. I never expected this from SoFi. But as you can see, SoFi is super overbought, guys. Super overbought, super overextended on the MACD. Let's see if we can find a time frame when this happened and what the stock did. So let's go to 5 years and see. So right here, as you can see, when the stock gets super overbought, remember guys, pay attention to this. So looking at the MACD, you can see that SoFi was super overbought twice. One, two. And what the stock did, it corrected itself and make a new high. So it doesn't mean that the stock is going to completely sell off and not return to where it was trading from. Let's look at it again. So on the R side, we come to look, was trading high, sold off, then pushed right back up to what was this, $8.21. And look what happened. Pull all the way back down. Let's see, we pull back down. We're trading at $8.36, and we pull all the way back down to $5 a share. So we gave up $3 and then consolidated for a period of time, pushed up again because it's a great company, pushed up, got rejected, higher highs, trading at $10.26. And then what happened? The company pulled on back, then pushed up, pull on back. So pay attention, guys. If you cannot tolerate this, where when the company pulls back, like say 5 6 7%, your account cannot tolerate it, guys. I would encourage you to take profit at the top, or reduce your position size and buy when it's more, when the stock seems more back to normal, which is trading not above our overbought side, but in the middle, where it's not oversold and it's not overbought. And then you can add more shares, take profit, add more shares to your portfolio. Because I can tell you this stock is not going to run all the way back up to $24 without correcting itself. Because again, history has proven it, not once, not twice, but more than once. One, two, three, four, five, six, seven, eight. 8 times this stock has run up and came all the way back down, corrected itself, and then run right up back to make a new low. Discount that this is a great company. So I will be keeping my eyes. And so far, where would I get in? Based on history, as you can see, the stock, once it run up, it tends to trade below the 200-day moving average, simple moving average. So once this corrects itself and it's trading back below maybe either $5 or maybe either $6, I don't know where, but I can tell you history has proven it. The stock was trading at $11.73 before, and what happened? It pulled all the way back. Let's draw this line. Pull all the way back to $5.95. So this is not the first time SoFi is hitting this high. SoFi hit this high. SoFi have a market high of $28, $28.26. I guess when IPO came out, and as you can see, the stock found itself, corrected itself, and was trading in like $5, $2, $3, $4, and pushing right back up. But again, this stock will correct itself, as all stock does, guys. And once it corrects itself, it's tend to run up to make a new high. This is where you want to get in, because you have room for pullback. So when the stock does when it does pull back, guys, you don't worry about it, because again, your average is not at the top, where if it tanks 5 6 7%, guys, then you're in the red for months, for years, until the stock decides to recover. So that's one thing I want to bring to your attention before you decide to get any shares in SoFi, if you want to go long. All right, so the next stock on my list will be MMLI. This company is trading, I think, in 5 different continents, and that's good. Their business is just not in the United States of America. So this company came across, and I did my due diligence, and I will be watching this company because it has again pushed up, like we just spoke about with SoFi, pushed up, push all the way up, hit new highs, and what it did, corrected itself, pulled back, from new highs. It pulled back around, I would say this is 3 to 4%. Pull back, make a correction. I don't know if this is there's no consolidation here for me. So as you can see, pull back here, consolidated, and then pushed up, then consolidated, pushed up, make a new high, and then pull on back. So RSI is pointing up. Remember, guys, we were oversold and we pull on back. RSI is making a reversal, but look at my MACD. Look what happened previously. Once the MACD crossed, we pushed up, we made a new high. If you're following, right here and right here. So we made a new high. And what happened? MACD cross, we're pulling back down. So for me to get into this company, you know what I will do? So I can manage my risks and manage my portfolio. I would not expose myself too much in the market because again, the RSI is still going down. There's no crossing right here. So this is something that I'm watching, and as you can see, we tend to find support at our simple moving average, which is our 200-day moving average. So once the stock comes right here and finds support, which most company tends to, good companies, then we rally from here. All right, so that's one company. Do your due diligence before you try to enter any of these companies. So, and this is KVYO. Nice setup. So as you can see, run up new highs, pull on back all the way down, didn't hit our simple moving average, which is a 200-day, which is good. So what the company did now, pushed up, got rejected, and then pushed up, and now I think we might made a new high. Because why? My RSI is indicating this. We cross on the RSI and look at the RSI moving up, and you can see the reversal up here as well. It is moving upwards. So this is something that I'm watching this week to get some shares in. So from here, if I get in at say $38 a share, I can make easily a 12% to previous high. So if I get in at 38, I can make 7.4%. That's a good return for me if I decided to get out, because I don't think the new high, I don't think it will form a resistance here. I think from consolidating here and pushing up, it will make a new high. Therefore, we can look to see if it forms a new high, which is, I don't know where, but as you can see, it's a company that I'm watching. For the last 3 years, you can see that it didn't cross on our RSI, our MACD. We're looking to go above. So that's something you can look into, another stock that I see great potential in coming next week. And this is my number one pick for this week. Why, guys? Why is my number one pick? Let me see who's watching and knowing what I'm doing. Make your comments in the video because I want to see if you guys are following. Look what happened. Super high. RSI super high. Pull back. Corrected itself. Super oversold. As you can see. Super oversold. And what the stock did from here. Pushed up. Got rejected. And keep on making new highs. New highs are forming. MACD confirmed it. This is why I love this stock. And this is why I will be trading this stock this week. Because from here, guys, to previous high, we're looking at 71.16%. That's a lot. You know why? The stock went through its bad time, went through everything, and now we consolidated, we pushed up, and now and pulled back down. Market was super over in the red Friday, and look what we did. We closed above the simple moving average, that simple moving exponential line. So this is my number one pick out of all, and it's a relatively cheap stock. So you again do your due diligence before you get into any of these stocks. But this is my number one buy. Within the next 2-3 months, guys, chances are we might trade, we will or might be trading over $7 a share, or even over $10 a share. So again, do your due diligence before you get into any stock. But look at this beautiful chart, guys. Look at this beautiful chart. I think $14 is in the reach soon, and anytime soon, because we sold off, we pushed up, and we're still pushing up. MACD is good, RSI is good. Number one pick, can't tell you more. So let's dig some more into this. So W UWMC. Let's go over and do some homework on this stock. All right, where are we gonna plug you? No, not you. UWMC. Let's see what's been going on. Why this stock pullback. UWMC, because I'm loving the chart, and it doesn't get better than that. You don't see so strong down, long term, midterm down, short term up. Let's see what's going on with them. So from 599 day range to 621, it closes at 615. All right. So this is the reason. So they have missed their last two earnings. So estimated was seven cents. They reported 4 cents. And again, estimated was 8 cents. They reported 7 cents. And their next earnings will be in February. But I'm still going to watch this stock. Their last two earnings was bad, but I'm still watching it because I love it. Why? Even though annually it's down, I'm going to keep in my eye on this stock because I love the chart. I love it. Annually, it's still up 8.85%. So it's not like it's down. It's in a selling range, but I'm still watching it. I'm going to do my homework. And once homework is done, I'm going to watch this stock to see what's really going on with it because the chart looking good. And with this setup, guys, only one thing can happen from here is either we continue to rally or we pull back down. So they missed their last two earnings. So that's the reason why the stock pull on back. But we don't know what caused the company to miss their two earnings. So again, please do your homework before you decide to jump into any stock whatsoever. Always do your due diligence. But until then, guys, please like and subscribe to the channel and let me know how can I help you in those comments. I'm here for you. This is why I created this channel. Until then, stay green in the market.